So we're going to go into the second session. This is DBA 104B, sources of capital and financing for SMEs. Some of the things that we mentioned in the initial session might still come in here. So just part of the outline we're going to go over are why some businesses don't get funds, how to be successful at finding funds, background plan for success, why you need finance, myths about needing finances, why you need a plan, main external funding sources, internal funding sources, relating with your vendors, some mistakes to avoid, tips on raising business finances, debt versus equity, and analysis of lenders and summary of funding sources. Okay, let's go. Why some businesses don't get funds? Number one, they don't know where to look for the right sources of funds. Listen, you don't, when you approach a microfinance bank for a loan that you know that the payback period, the earliest payback period is probably 1.5 or 2 years, they already know that you don't know the right source. They don't have that kind of long period to give you. All right. The next thing is they don't know how to pre-qualify before applying for loans. You see, there is a pre-qualification process. You need to pre-qualify yourself. Do I even really qualify? Remember all the things we listed about the conditions, the things that you need, the bankers are looking for. If you don't pre-qualify yourself and you come for the loan, you've already ended where you started. You don't have a loan. They don't know. Number three, they don't know how to successfully present their request. Of course, number four, they don't know they don't know they will hear no for missing just one thing. Packaging a loan proposal is worth the stress. You must cross all your T's and dot all your I's, because just for one thing that you missed, you will hear a no. They don't know that a good system enhances their chances, whether it's a computer system, an IT system, an automated system. It enhances your chance. Banks are trying to reduce their exposure, like I said earlier, and they want to reduce their chances of failing or losing their money. So once they hear that you have an automated system, it increases your chances because you've reduced the human error involved. They never take the time to build a good business credit rating. The last loan you got, do you have a record of how you paid it back? Listen, if you get a loan, whether it's from a cooperative or from a microfinance bank, the record of how you paid back that loan is important for you're accessing the next loan from another institution, because showing them that record that you were paying at when due shows that you're a credible person. Okay. They don't separate their personal credit from the business credit. As a startup, it's always difficult to separate your personal money from business money. I think the first thing you need to do is create a system, separate you are Lagbaja, and there is Lagbaja PLC. Both of you are separate. Create a record of your business expense and income, create a record of your personal expense and income. And when you are owing money, put it in your own personal debt profile. When the business is owing, put it in the business debt profile. When your debts and your revenue, your income begins to mix with the business, it raises a lot of questions, and it might prevent your getting loan. Okay. How to be successful at finding funds? One, study and understand the criteria for different funding sources before you apply. Listen, the criteria for getting a funding from a commercial bank is completely different from the condition from getting from a microfinance bank, and totally different from the condition from getting in a cooperative. All right, know exactly what your request application must contain and what it doesn't have to. Okay, and that depends on the first point. And then build a good business rating, credit rating, with all your transactions, and keep evidences. Like I said, you borrowed money before and you said you're going to pay back every 2 weeks. All the deposit slips, you need to put them together. Print the statement that showed how you paid it off in 1 year. It's very important. Your transaction, business credit rating, and the evidences, very important. What are the background for planning for success? Finance is the management of money, or fund management. Okay, so how you manage your money is very important. Okay, modern finance is a family of business activities that includes the origination, marketing, and management of cash and money surrogates through a variety of capital accounts, instruments, and markets created for transacting and trading assets, liabilities, and risk. This is just trying to say that modern finance has taken financing to the next level. Initially, it was just the management of money or funds management, but now it's gone beyond it. It encompasses a variety of capital accounts, instruments, markets created for transacting and trading assets. You need to know beyond just holding money and managing money. You need to understand finances. You need to understand currency. You need to understand the business of money. It's all about a business. It all begins with a business plan. Please, whatever you do, try and complete your business plan. Very important. Capitalizing your business is a full-time endeavor. Remember, your business needs capital to function and to survive the economic downturn. So it's a full-time work for you as a CEO or an entrepreneur. Capital creation through finance is a key part of the business. And then business is like an automobile. It won't run by itself except downhills, as Henry Ford rightly said. So you need to run your business up if you want it not to, if you don't want it to go down. Some of the reasons why you need finances makes commerce possible. There are some businesses that you necessarily need money, additional capital to transact. It helps you to speculate on business deals and to make profits or losses. When you have money, take advantage of business opportunities. It helps you to fund your operating needs. There are some businesses that your overhead, your operating expense, it needs some financing to keep you on the road so that you can make the big bucks. It helps you to meet short and long run investment objectives for your business, and it helps for project expansion and capital structuring. It helps to build up your working capital requirements. You need finances for your working capital requirements, and you need it for merger or acquisition transactions. See, opportunities come almost every day, especially if you live in a city like Lagos. So many opportunities. JP Morgan's in the US. If you watch The Men Who Built America, it's a documentary I would recommend every entrepreneur to read, to go and watch. It's a classic. One of the things that JP Morgan's used to almost buy up the economy of America at a point was injecting money, buying up businesses that wanted to go bankrupt. They will inject money into it, buy it up, and at a point, just having funds to acquire businesses that were about to go bankrupt made them the financial giants of the world at a point. Okay. Now, what are some of the myths that you need to stay away? Number one myth is that I don't have anything to offer. The first truth to counter that myth is you are your dream's business investor. Listen, you are the major investor of your dream. Okay, your personal worth make up your off-balance sheet items, and they include your thoughts and your dreams. You've got to place value on your capacity. What it takes to put a business together, a business idea together, it's not yamo. Okay, I'm serious. It takes a lot. You're thinking it through, putting all those thoughts together. Your decision-making process is an asset. It's an off-balance sheet item. Your values, your personalities, your relationship, your strength and your weaknesses. Listen, people will not invest in your business until they can invest in you. They are equity, and you need to place value on them. Your sweat, there's something called sweat equity, and this includes your time invested in the business and your energy invested. The time you invest thinking about things and the energy you invest running around, they are much. So investors must be convinced that you've issued the biggest check. Remember all the things I said up, the check of your personal worth and the check of your stock equity, and that your check must be big enough to secure their investment in you, and you must be willing to risk it all. And if you don't believe, neither will anyone else. No, but listen, you are the first evangelist, you are the first believer, you are the first crusader, you are the first fan of your business. Your enthusiasm for your business must be contagious enough for the investor to want to come in. Okay, the second truth to counter this, I don't have anything, is that you need to master the magic numbers. It's called the gross margin. Keep track of your monthly sales and gross margin, which is gross profit as a percentage of sales. Okay, numbers run businesses, gentlemen and ladies. They tell you how to make money with least time and effort. Your numbers. Listen, when you don't have a grip of your numbers, you run out of money. And in a recession like this, like we are having in our country today, cash is king. Somebody can wake up tomorrow morning and want to sell off his business and want to sell his property. Somebody can wake up tomorrow, a house is built, he's built for 120 million, he just needs 24 million to check out of this country. And you're just having that money on ground makes you the owner of an office complex that you almost got for free. So numbers run business. You must know your numbers. What's your profits last month? What's your gross margin? What's your balance sheet? What was your balance sheet last year? What was your end? How much did you close last year with? So you must know your numbers. Very important. How much do I have in cash? How much do I have in bank? How much am I expecting to come in? How much do I need to am I owing? Who am I owing? Who is owing me? These numbers must be at the tip of your finger. So the other thing you need to understand is that money men, call them venture capitalists, they need you as much as you need them. Listen, no bank is holding money for fun. The banks need entrepreneurs as much as entrepreneurs need the bank. The venture capitalists need you as much as you need them. And let me help you understand. There are many people, rich people in this country who are looking for where to invest their money. And there are many credible politicians, and I say credible politicians because I mean credible politicians who have made money and they are looking for where to invest it. All they've done in their life is politics. They don't know how to do any other thing. So now they've gone out of power and they don't even know what to do again with their life. They are looking for where to put their money to make it change form. So you need to be positioned for that. They need you as much as you need them. They care more about the best channel of investment. They are looking for the best channel of investment. Okay. All right. What forms does funding take? Okay. Your funding can come as a debt or equity funding. It can also be an internal funding sources, which is existing owners' capital or directors' equity or partnership, friends and family, or some lazy cash, some money that somebody dashes you, you win a lottery and all of those things. Number 3, external funding sources. And some of them can come as overdraft financing, trade credit, equity finance, business angel financing, hire purchase, venture capital, and merchant banks, okay, which can offer you between medium to long-term loans. There are also structured and unstructured financing or loans. Do you need a plan? Every business owner must prepare 2 major plans: the funding plan and the business plan. The funding plan, like what we talked about earlier, is a loan proposal. Funding plan. A funding plan achieves the following. Number 1, it will reinforce and support the vision and strategy of the business. Articulate your short, medium, and long-term funding goals. Specify what you hope to achieve after spending your funds. Set out the naira values of items needed, when and where they will be directed. Identify and assess your funding options and match them to your funding goals. Your funding plan will also consider the key strengths and threats that would impact your ability to obtain the funds, and of course set out an action plan with priorities and responsibilities. Finally, it will incorporate tracking mechanisms like a cash flow forecast and the business and the budget. Now, if you look at the business plan, a business plan should provide right information on business, people, market strategy going forward. You've done that pretty much in your business plan. And entrepreneur, as a first-time entrepreneur, write it for yourself, not for potential investors yet, because it will be realistic. Your executive summary, the players, knowing who you are, your character management, board of directors, goals, financial projections. So you need to go back to your business plan and ensure you complete it. What are the main external funding sources? What are the main external funding sources? Now you have grants and the tax concessions. Grants like the federal government, you win grants. They are not necessarily loans. They are money given to you, but they are given to you with conditions. Conditions like how many people you have to employ, or the kind of social responsibilities. A lot of Bill and Melinda Gates Foundation give a lot of grants. And now, if you have a business that is focused on doing something in the area of polio, malaria, medical research, you can get such grants. But you know, those grants, you can't use them to do something else. The government can also give you tax concessions, okay, based on maybe you are the first to start it, or you are dealing with a particular area. I mean, if anybody starts a business that can fix Boko Haram in 1 year, I can bet you have huge tax concessions. I mean, okay. Second main external source, debts, which is bank lending. The third part is equity. You are telling somebody to bring in money and take a share of your business. If you look at internal sources of finance, you have the owner's fund. We treated this earlier. Like I said, you can sell your stock or your shares. Remember the first speaker we have, Engineer Gabriel Beche. He shared the story about how he raised his first 300,000 to start his oil business. He only sold his shares. So you need to learn to put some money aside to invest. He calls it, put your money in a form that changes form. Buy shares, buy a property, invest in a land somewhere, fence it and leave it. After a while, you can sell it and take that to invest in a business. Some deferred payments, you've done some things and it's okay, you can pay the money later. You can use that money and make investments, revenue that you've made, and then some internal cash that you've stacked over time. Every business, I heard something about called war chest. I've never heard that before until recently. War chest is just huge amount of cash that you accumulate and you stack and you don't spend it. I hear a very the owner of a very popular business in Lagos, if I mention his name, every one of you know it. He says it does not, he said, whereas other businesses spend 90% and save 10%, he saves 90% and spends 10%. Isn't that amazing? And if I tell you this business, you'll be so shocked. He started it broke, he was just managing, but every money that came in, he lived 5 times below his revenue, his income. He saved 90%. Today he has, I'm just so tempted to mention his name, but I will not mention his name. But he's doing big time business. Listen, it's about, you say war chest is, war as in WAR, chest as in sack of money. Then war used to be fiscal exertion. Now it's economic powers, having enough money to buy up opportunities. Very important. So I'm just using that to stress the internal cash. Okay, when relating with lenders, what are the mistakes to avoid? There are common mistakes that affect your relationship with your lenders. Submitting your financials late, very, very important that you guard against it. Running on uncollected funds. Okay, being unresponsive. Your bank is calling you and you don't respond. I mean, you're unresponsive. There are things you're supposed to do at certain times and you are not. You're missing on the deadlines. You are not. You act like you didn't get the notification. That can put you into trouble with your lenders. Neglecting early relationships. Remember I said relating with lenders is like a relationship with a man and his wife. I mean, sorry, just a slight digression. When you want the thing, you don't, it's not that night, that moment. Sometimes you begin to lay the foundation. I'm talking about married men. Please don't get it wrong. You begin to lay the foundation from morning when you go to work. You give her a call, you find out how she's doing, you help her do some chores. All of that prepares the ground. So we talked about your relationship with your banker. It's got to be, don't make it cordial only when you need money from them. Build a relationship. Okay, failing to keep investors adequately informed. We've talked about that already. Ignoring the rules. There are rules to the game. Arguing when you are wrong and aiming to retain absolute control like before. Let me let you understand. You must be willing to give. When venture capitalists come in, when venture VC, when they come in, they want to take a part of your business. You are going to negotiate that. So we'll be sharing some video clips, and you'll see how some smart guys let go some part of their business, and they got the money they needed. All right. So you need the cash flow projection. Let's look at cash flow projection. It's designed to track cash as it flows in and out of your business. It shows the causes of cash flow shortfalls and surpluses. Its positive cash flow indicates that the business is funding its daily operational working capital needs without the injection of external funds, while negative cash flow indicates that external funds are needed to provide the working capital for your business operations. Note the funding sources will carefully analyze your cash flow statement to see what is going on in the business. And your cash flow statement that shows how much cash is generated and used by your business and for what is very important. They are going to look at all that. Okay. Let's move on. I mean, you are going to get some of this information on in your pre-read. But I mean, the last part of the slides it says cash flow factors can be seasonality, which is, does the business have revenue downtime periods? If you're a consultant, if you're running a consulting business, you know that your money doesn't come in every month. Sometimes you stay 3-4 months and there are no revenues. So if you're running a business that is sensitive to weather, it means that once rainy season starts, there's no business for you. So cash flow must reflect that. Other factors are collection time periods. What's the typical aging? You know, is it 30 days, 60, 90 days cycle? Are you into supply business? And if you are into supply business, what's the cycle of payments? How do you get your money back? Okay, there's the accounts receivable growth. How many orders can the company manage per time? Okay, your projection must consider immediate need for capital, which is bills to pay, your capital assets acquisition, required equipment for the business to run, inventory planning, which is necessary for if you are dealing with raw materials, then your working capital requirements, payroll, payables, and all of that. Market penetration, when will the cash flow begin? All right. Don't be overly optimistic or too conservative. Either one will hurt you in preparing your cash flow. Know what factors will affect your projections to the downside, like sales, cost, price, breaks, and all that. Work closely with third parties, financial advisors, accountants, industry consultants, tax consultants, retired executives. They help you put some of these things into perspective and ensure that your 5-year cash flow model should be month to month for 1 year and the quarter for the next 2 years, annual for the last 2 years. The first year, show them month to month cash flow model. For the next 2 years, show them quarter by quarter, and the last 2 years, show them annual. Okay. Key indicators and ratios that you need to watch out. Being able to summarize your important financial points allows the lender or the investor insights into whether or not you understand how the money world operates. So you've got to provide support for sales revenue, price points, fixed costs, gross margins, net income. All these points are important to the lender. So go and find out how to calculate this. If you are not a good numbers person, ask your accountant to calculate the following ratios: current ratio, quick ratio, debt to worth ratios, gross profit margin, net profit margin, debt coverage ratios. All these things are important. Get your accountants. You don't have to be the person to work all of these things out. Okay. When you are making presentation on to raise business finances, what are the key tips? The first tip is that your first impressions are lasting. So you've got to make a good one. the way you appear, the way you smell, the way you speak, and every other thing. We'll deal with a bit of that in your pitching session. Secondly, you need to bind the material in such a way that allows for easy reading. In such a way that I saw some of the business plans that you submitted. Some of them were bound. A few has problem, you need to open it. Sometimes it comes off, but whatever you're doing, just do something that because it's a short session they're having with you, and you've got to ensure that what you give them is easy to read. Tap each session for quick and direct access. Don't get what you're writing to be too close to the bullet point. Keep your information concise and to the point. Not more than 25 pages. Whatever you're submitting to venture capitalists, try to keep within 25 pages because they don't have time to read a lot of details. Pictures are worth 1,000 words, so include appropriate pictures in your submissions. Support assumptions with facts, not more assumptions. Don't depend on a bank to loan you money to start a business as much as possible, because they'll start drawing down on your profits. Okay? Overcome the mentality that raising money is hard. No, it's not hard. Deal with it. Understand the available financing option for your type of product or service. I've talked about that. Determine which financing option suits various phases of your company growth. At the point where you are starting, the options for financing your business might be different from when the business begins to grow midway and when you have established as a market leader. Question the marketability of your business idea. Sit down and question it. Ask all the critical questions. Bring in critics. Let them do objective criticism on your business idea. Gain knowledge of the proposed business. We've talked about that already. Determine how much you really need for the actual business to take off. Not luxury. Hello, not luxury. As an IT person, as a consultant, you don't need an office to start. I always say this: if you have a living room, turn that living room to an office. There is no point having a living room when you're not making a living. Change the setting. Turn your living room to an office. Deal with all the paperwork and ramifications. You don't need an office. It's going to swallow up all your profits. If you're an IT person, your office is your laptop, for crying out loud. Okay, until the business has enough savings to pay your for your office. Don't bother yourself getting an office. You don't need an official car to start a business as a lawyer. Come on now, how about if you're going to see high net worth individuals, take a taxi, a clean one. But everything, try to avoid unnecessary overheads. You need to know the difference between fortune tellers and financial analysts. So whoever is preparing your financial records, is this person a fortune teller or is a real financial analyst? Most lenders want to see your business plan, so have it handy. Some may not, but just be sure that you have it with you. We've talked about always dress neatly and well to your meetings. If they don't buy into you, they won't buy into your business idea. Keep your lenders informed on the true status of your business. Notify your lenders in advance if you are unable to meet up your loan repayment plan and request for an extension. Be prepared to discuss your prior credit issues or problems. Listen, this particular point, if you are owing a debt, and it begins from how do you manage your personal debt. Some of us, it's become a mentality. You are owing someone money, you couldn't meet up, and you start avoiding the person. You don't pick his calls, you avoid the person on the road and all of that. Deal with that. I think you should be the one to contact the person you're owing when the time you're supposed to pay is approaching and request for an extension. Okay? If there are issues you've had with paying your debt or credit issues in the past, discuss it with your lenders. It shows them that you are truthful and you're upfront. Okay? Because if they find out behind you, that would be very bad. Have a friend introduce you to a lender. Best access to a lender is a referral. Remember, he has made his hard-earned money and he's going to throw it on somebody he doesn't even know, one joker that is speaking plenty grammar. So if you can have someone introduce you, it makes the job easier for you. Like I've said, be a person of integrity. Lending is a people business and checks will always be done either formally or informally. Avoid giving the impression of being an over-optimistic operator. they know when you're lying. Don't depend on a bank to raise your startup funds. Most small businesses are funded by personal savings. We said this, we can't overemphasize it. As a startup business, nobody knows you. You are trying to get your place in the market. Don't use debt, because the banks are going to come for you and you're going to mess things up. Okay, make a shrewd appraisal, minimize your risks, and limit any possible losses. Your suppliers and vendors can be sources of finance. Listen, sometimes you don't need capital, you just need things like, go to your supplier, ask for things like installment payments or longer payment periods, or advertising and marketing assistance for people who deal with multi-level product. Sometimes they can take off the advertising cost and just include your name on their name in the list of their distributors, and that takes off that creates market for you. Bartering can also be a source of funding. You can exchange one commodity for another as a source of finance. Now, my former boss wanted to start a consulting business. He didn't have money to buy a laptop, so he gets this job. He was good. He made this speech to do a job for a client, real life story, and the client says, fantastic, okay, I'll give you this job and I'm going to pay you 250,000. This was like these are like 12 years ago. I mean, I'm talking about big money. 250,000 was a big money then. Here he was, 250,000 naira job, but he doesn't have 70,000 to buy a laptop. You know what he did? He goes to the man. That man was very bold. He goes to the man and he says, you know what? Okay, Mr. Lagbaja, I'm willing to do your job, but I have a deal. He says, Mr. Lagbaja says, what's the deal? The deal is this. I will need to borrow your laptop to do your business plan for you. Mr. Lagbaja laughs. And he says, you must be a joker. So with all this grammar, how can you be a consultant without a laptop? You know what my former boss says? He laughs and he says to him, you know what? You need a business plan, innit? He said, yes, sure, I need a business plan. He said, can you write a business plan? He said, no, that's why I hired you. He said, fine, you have a laptop, you can't write a business plan. I know how to write a business plan. I don't have a laptop. Let's barter. You give me your laptop to write your business plan. I will give you the business plan that you need. I know, I mean, just like joke. The guy gave him the laptop because he couldn't fathom, he couldn't imagine that kind of boldness. So he got a laptop, did the business plan, and got paid. So because, I mean, the laptop could have been on the table of his client. So sometimes you can think of what you can barter. What can I do to get the business? A key consideration in choosing the source of new business finance is to strike a balance between equity and debt to ensure the funding structure suits the business. So we look at debt versus equity. I need to rush now, my time is almost up. Debt consideration: what type of debt financing can my company qualify? Like we said earlier, how much debt can I afford? How can I handle the payment if cash flow is down? You need to ask those questions. What happens if interest rates rises? You remember the moment the dollar rose, the value of naira fell and the dollar rose. What banks did? All the people that collected loans, they changed the interest rates. They didn't mind that there was an agreement. They would change because that was an economic impact. It's something that they could not control. Am I willing to pledge company and personal assets? And what about my personal guarantees? Okay, if it's equity consideration, the question you need to ask is, what type of investor do I target? Okay, am I willing to share control and future profits? Because when they come in, they start controlling. They tell you you can't hire that person, you can't do this, you can't do that. Do I really want investors as partners forever? So if you don't want them forever, you can now do a term loan to say, okay, you know what, in the next 10 years you are an equity owner. After that, you will pay you out, you cash out. Okay, how much of the shares am I willing to give up? Like we were thought by the lawyer, always retain majority share. At least 51% of the share must be your own. Don't even toy with that. Will I be able to keep up with all the required reports? Because once they bring in their money, or you'll be giving them updates and reports. What about disclosing company secrets to potential investors? Am I willing to do that? So you need to settle all of that. Now, this table, I'm sure you will get this table in your pre-rate, but I'll just give you an idea. Factors with different lenders. For your personal savings, there is no cost involved. There is no paid back terms. What's the size? It doesn't exist. I mean, it depends on what you have. Why do you go for personal savings? Because one, it's easy and it's cheap, and you are borrowing against the risk of losses, right? If it's family and friends, the cost is usually good. You get good rates on no interest. The payback is very flexible. The size is depending on what they can afford. Why do you go for it? It's flexible and best value. It can create frictions. The risk is it can create frictions, okay, among when you start doing business with family and friends. Things like mortgage, suppliers, landlords. You can actually borrow from the landlord. Venture capital, commercial mortgage. So when this table is sent, you just take your time and study it. Summary of funding sources, okay, in different countries. Summary of funding sources in some African countries. Okay, now this is interesting. In Nigeria, own savings contribute 59% of the money people use to start their business. Relative about 15%. Banks 9%. Money lenders 14%. Others 3.0%. But look at Ghana. They are not even expecting anything from government. Money lenders are not expecting anything. Others are not expecting anything. Tanzania is not expecting anything from money lenders. Now, all of these things tell you the dynamics in different economies and what options are available to the entrepreneur or the startup. If you look at this very well, to a large extent, Nigeria, apart from Ghana, still enjoys the largest access to bank loans. 9%. Ghana enjoys 10.8%. So you need to take advantage of all these options for funding your business. Closing remarks. Along your entrepreneurial journey, always render appreciation and gratitude to the people you work with and to God. Ensure you thank those who help you. If you will treat others the way you would like to be treated, you will find the people will go out of their way to help you. And remember to keep your priorities straight and know that money cannot buy happiness. Money will come. Listen, to own your business is good, but when the money comes, don't let it get into your head. I wish you all the success in your search to find your business and your funding for your business. And a food for thought. What does it profit a man if he gains the whole world and loses his eternal soul? So please, in all of these things, don't lose a grip on God. Thank you very much. It's been a good